morning, good afternoon, good evening, traders from across the globe, and welcome to the 1020th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video is being filmed on Thursday night for trading Friday, May 10th, 2013. As we know, futures trading can be extremely risky and cause substantial financial loss. If you do not understand the risks behind trading, if you do not recognize that a stop is your best friend, you must know that futures trading is not suitable for all trading accounts. So if you don't use stops and you don't have risk capital, get up and run, because this is not for you. For you traders that understand the risks, rock and roll, let's get into tonight's video. What do we have on board? Again, video number 1020 for trading on May 10th. Traders, first of all, I love the green omni once again in NASDAQ and S&P, and I'm going to clap for that green omni. I love those green omnis. The S&P is having F flag mania, and F flags, as you know, is an Oscarism. An F flag you will not read about in other books or study about elsewhere. It is an Oscarism, and I say F flags are bullish until that F flag is violated, and that's what we have going in the NASDAQ, the S&P, the Russell, and I will show you some charts that will absolutely depict the F flags. In gold, we have a question. Is it a bull flag or is it a bear flag? I'm going to show you that on the daily in gold. We literally have to question whether or not we're in a big bear flag or a smaller bull flag, and I'll show you that. The weekly gold chart would make any technician stop and think about whether you're in a bull or bear flag, and I think the weekly chart might confirm which one of the two that is. So traders, in this chart segment, I think that you will see that it's probably going to turn out to be a bull flag in gold, and for maybe short-term trading, but I think that's what we're going to see. Now, another very interesting trade that I've been following, traders, is the Australian-Canadian spread trade. The 6A, 6C spread. It is a trade that I'll only get involved in once or twice a year. The market has to set up well for it. If you're interested in trading euro currency, if you're interested in trading the Australian dollar versus the Canadian, I don't know where that euro currency came from, but if you want to trade the spread, euro versus Canadian, come on down to livewithoscar.com. Come into my free trading rooms and allow me to show you that spread. Allow me to show you these F flags. And let me show you why the gold is questionable. Will it break to the upside or downside? Traders, with no further ado, let's go look at some charts. Traders, the first chart this evening I'm going to show you is the emini S&P daily bar chart. As you would recognize, this major parallel channel working towards the upside. You got to love that. But look at the F flags. This is F flag mania. An F flag is a flag that moves up. It's almost like a broken flag, because if it was a bull flag, it would look like this. If it was a bear flag, it would look like that. But it's an F flag. This one is different. It is an Oscarism. It is that, and it usually will make a market move higher. So when you see an F flag, expect more. F flag number 1, we move higher. We're in F flag number 2. We are going to buy the dips in the emini S&P unless we violate that F flag. Let's look at others. Traders, look at your Russell. Look at that wonderful F flag after a very, very bullish inverted head and shoulders. Inverted is a bullish signal. The head is down here and the shoulders are up here. That's bullish. We go up into an F flag, and I like that. Traders, if you want to learn about F flags, and if you want to learn about technical analysis, come on down to livewithoscar.com and fill out your OmniCamp applications. I'm holding a 4-day training session live here in Las Vegas. It is the last weekend of June, called OmniCamp. Come on down to livewithoscar.com and fill out your applications. Let's move forward. Traders, in the NASDAQ, look at the NASDAQ, another F flag, a very strong looking F flag. That's bullish for day trading. We want to buy the dips in NASDAQ. And then we take this out to the weekly now. Traders, look at your E-mini S&P on the weekly. Started out with this major inverted head and shoulders. Then starts to run into this parallel channel. Traders, these trend lines go all the way back to 2007. This was resistance all the way up into our bull market. Then we came down and had our crash lows. We've bested all of those resistance levels. We are all the way up here now, besting those resistance levels. Traders, wonderful news on the weekly. Traders, here we are now looking at a chart I have showed to my Omniacs in countless classes. We've been looking at this chart for months and months on end. This is a weekly chart of the Dow Jones Transportation Average. Traders, there's a lot going on in this chart. You have a huge inverted head and shoulders, the blue circles. Inside of the shoulder, you have an inverted and another inverted, so two head and shoulders inside the right shoulder. Inside the left shoulder. Then you have an upright head and shoulders in the head, and then you have the right shoulder with another inverted head and shoulders. Traders, that's about as bullish as the day is long. And if you wanted to take this and call this a shoulder, you'd also have shoulder, head, shoulder, and then an inverted. This is one big bottoming pattern. So I showed this to my Omniacs months and months ago, and I drew a target. You know what that target is? The 7250 area in the Dow Jones Transportation Average on the weekly bar. We're only trading 63. We expect 7250 out of this market. That's a big, big move over time. Nothing we expect to happen right away, but it is something that we do expect to see. The projection off this head and shoulders takes us to 7250 on the upside. Now we have the insane gold bug market, traders. Gold bug, pull your chairs closer to the camera because here we go. Is it a bull flag or a bear flag? Traders, we've had a terrible market lately in gold, and then we tumbled, and this looks like what is now a bull flag, right? You have a flagpole and a sideways consolidation. When you look at that, you say, that looks like a bull flag. But then we look at the chart again, same chart. Was that a bull flag, or is the whole thing a big bear flag? That's the question. You would think because we're in a bear market in gold that that's a bear flag. And I would like to agree with you about that being a bear flag. But then we pull a weekly chart. And when you look at the weekly chart, traders, again, I showed this to you in the beginning of this week. Look at the bars now above the 200 bar moving average. You've got three solid weekly bars above the 200 bar moving average. At that point, if you're not showing this average respect, you're not a good technician. This average, it's the 200 bar moving average. It is looked at by fund managers all over this planet. And the fact that gold has held for 3 full weeks above that 200 bar after testing it down here tells me we have to call that little thing that we see a bull flag in gold on the daily and look towards the upside unless something changes. So we are buying dips in gold for trading on Friday for that reason. And then there's this. Don't forget the F flag mania, traders. This is the E-mini S&P. F flags are flying all over the place. F flags are bullish. Make sure that you pull your own charts, look for your F flags, and take a look at that gold scenario.
Traders, Oscar Carboni is holding another OMNI Camp live in Las Vegas. OMNI Camp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
So, traders, you've seen the charts. There's my technical argument for the green omni, and you know I love to clap for those green omnis. Now, you've seen the scenario in gold. Is that a bull flag or is it a bear flag? The bigger picture looks like a bear flag, but when you look at the 200 bar moving average, you gotta call that a bull flag for now. If we break the 200 bar, we'll turn that into a bear flag. For now, traders, I'm going with the 200 bar moving average holding on the weekly and the gold having a bull flag, at least for day trading on Friday. Here is what I wanted you to look at with the Canadian Australian dollar. The Australian dollar versus the Canadian dollar. Australian dollar is almost always more expensive than Canadian. They're starting to get close to the same price. When that happens, we buy Australian, we sell Canadian, and expect them to go back to equilibrium. It is getting near 100 right now. That would be 100, the Australian over the Canadian. We like it anywhere under 100 down to par. We love it down there if we can get it. But traders, we are absolutely going to keep our eyes peeled on the Australian-Canadian spread. All right, traders, that's about it for tonight's video. Make sure you come on down to livewithoscar.com. Come visit me. Come to my live trading rooms. Remember, don't trade alone. Come to livewithoscar.com and allow me to help teach you the art and technique behind trading based on chart technical analysis. Traders, the analysis behind these markets are about all that really exists. There's news, there's all kinds of things that come out, but these are futures markets. They are usually telling us the future where the stock market will be. So when we look at something like the emini S&P and we see it move higher, it is telling us that the economy is going to come up behind it. That's why they're called futures. Believe in your futures markets. Believe in your charts. Come on down to livewithoscar.com. And remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And we know what that is. Stops are in. Emotions are out. Rock and roll, baby. Video number 1020. And watch out for the F flags that are flying. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.